Hey guys, I want to talk about CCCC. This is in reference to my video on SCRA versus. It's funny that I just hit record as the squeeze is happening. I'm not interested in shorting this. Eventually, is there going to be a 20-30% pullback on this? Sure. But I'm going to tell you why I just did not short this. During this entire run, there's really no reason to. Um, if any of you watched my comparing a biotech video, when I compared SCRA, remember that did this move, right? And comparing it to ZVSA, that's currently trading at 60 cents. I talked about why fundamentally these two are very different companies. And kind of how you can use, information that you could find out in less than 30 seconds to kind of create a rule of thumb of how to avoid these types of plays, like how to avoid, can't type, how to avoid stuff like this, right? So, CCCC, from the get-go, I saw this pop in a pre-market yesterday, and the first thing I see is that it's like a 40 million float, 80% IO, and IO is one of those things that everyone kind of overgeneralizes, right? People are just kind of taught that high institutional ownership is not a good short, but it's really understanding how institutions think, right? Like the reason institutional ownership can be bullish is because institutions have a lot of money, and if they support the bid, the stock goes up. Very simple, right? But it's like, why? Why would an institution want to buy a stock, right? It's very simple. It's not just IO equals bullish. It's IO plus reason for institutions to buy a stock is bullish, right? So you have to look at the news, especially in Biotechs. And I'm going to repeat this, like I said in the video, that biotechs are event driven. They're event driven, okay? Like biotechs have usually no revenue, especially these smaller companies have no drugs that are currently being sold. They have one or two drugs in the pipeline, and their entire future is dependent on these one or two drugs that may or may not hit the market, right? And depending on the data, depending on the news, especially for these high IO plays, that will determine if institutions are interested in not just initially buying the stock, but buying more of the stock, right? Like, so it's not hard. Institutions have large positions in the stock. If they see news that they like, they will buy more of it. Okay, so what is the news on CCCC? The news is that they're in a collaboration with Merck, MERCK, which, if you're going to be in the small cap space, you have to know who the big biotech companies are, right? If you don't know who ABBVIE is, or or Merck is, or obviously people know who Pfizer is now because of the COVID vaccine, but you need to know who the big these biotech companies that make 50 billion in revenue a year, 100 billion in revenue a year. You got to know who these guys are because they will partner with small companies if they like their drug, right? So sometimes you'll get low floats who will try to mention big biotech companies in their PRs to kind of trick algos and trick traders into thinking it's meaningful. If something like ZVSA, like some diluting 1 million float, chart that kind of looks like this, that's down 99.999% from highs, and or ATNF, like these types of plays, like if a 1 million float stock down 99.999%, who's diluted and reverse split 20, 30, 40 times, is like, yeah, Eli Lilly's investing $100 million in it. It's like, it's like, nah, I doubt it. It's like, I highly doubt it. But CCCC, if you get a larger float, high institutional ownership stock, they had the charts broken because probably when they IPO'd, they had some bad data come out and stuff like that. A lot of these big gap downs come from bad data, right? So you do get broken charts, but the stock still has 70-80% IO. There's still legit funds holding this stock, right? It's not quite the same as ZVSA or ATNF and plays like that. So I mean, yeah, look, it's just there's an infinite bid on this thing. And even if we look at the book map, like let's look at something like this, right? This crazy high day clear out, right? Low, very low float, high volatility pattern, right? Obviously just reclaimed the whole move, right? From the twos, and now it's at five, right? It's up 150% from the bottom of this move, right? So if we just look at the book, we could see that. Like we could see like here's the crazy clear out. If we zoom really far in, you guess you can tell they pulled the bids. So this is a very low float short type book map pattern, but it's the same stuff, right? They pull it down, short start chasing, empty space on the book, throw up some bids. I long this at market open, but I didn't long it here. This was a huge miss for me. This was such a clean long on the book, and combining it with shorts chasing and the good fundamentals and the good news. I mean, this was honestly like an A plus swing long entry. Kind of really fumbled the long on this. I just made a little bit on the long, didn't short. But if you look at this, like there's just even though there's like ask, and seemingly no bid support, these guys are just buying. These funds will just keep buying. They don't care. They don't care. It's not like a low float. Like a low float is usually just controlled by one person, right? So they kind of need to manipulate the book to move the stock up and down, because in low floats there's a lot of empty space, right? You actually see over here, even though this looks really empty, there's still like 12,000 shares, 15, like every cent has 10 or to 20,000 shares stacked on it. Like there's tons, and so even though it looks empty, the total number of bids is actually quite high. Where in low floats, if something looks this empty, these numbers will be like 500 shares, 300 shares, right? 200 shares. It won't be 11K, 10K, 15K, 18K, 10K. It's like at every single penny level. Will be much emptier, right? But on a thicker flow, good news play like this, you have tens and 20,000s of shares at every penny level, right? So it's not a low float. It's trading volatility patterns just because of the volume in it, the day traders in it, but the book is really nothing like a low float book. It's very different. It's important to know those differences, right? Um, Also, this is kind of why like this stock doesn't really. Um, it's like why if this was a low float, this could parabolic like from 4 to 5 to 6 to 8 to 10 like dude. But this is more of like the book's so thick that outside of like the key squeeze, even these squeezes are just like 10% squeezes. In low floats, this would be like an up halt followed by another up halt followed by another, because in low floats the book is so thin, it's very easy to just go up 10%, go up 10%, go up 10%, right? Um, this is just steady accumulation. Such an incredibly strong book. The 15-minute on this is super clean. Super clean here. This is just clean. Got to remember that funds and institutions trade on longer time frames, right? So I was telling my Discord that um, for a lot of these institutions, they don't care about these pullbacks. Like you see there's like a dump here. Quick dump, quick dump, quick dump, quick dump, quick dump. Like every single one of these quick dumps just got soaked on the MAs and just went back up. Like every single one of them. We see it here. We're like quick dump, soak, soak. It's quick dump. This actually ended up giving what in low floats. This would be a great pattern. Up only, fake 5-minute flag, short to push up here. In low floats, this type of pattern would fade 30%. If this was on like a BS, if this was a day two gap on like some like low float POS, like it would have went all in on this push. This is great. This is like A plus. But yeah, I did again. I'm not touching it. Still not touching it. No reason to touch it. No reason to touch it here. There's no reason to touch it this morning. There's no reason to touch it over here. I took like actually on this clear out on that bookmap read. I did take like high 220s to two, and I just took only that move. Um, just because the volatility pattern was insane. But honestly, it was a small trade. But yeah, I just want to make a quick video. It's 10 minutes long, but so I have a quick video. Just like just look up uh, like look up the news. See, if it's a higher IO, thicker float play, and they start talking about like collaborations or licenses with like big name biotech companies, if they start talking about positive like phase three data, if they have like legitimate like analysts and funds who are covering the stock, like those are all, if like gapping percentage, as you see, gapping percentage doesn't matter on these plays. It doesn't matter, right? If it's a legit catalyst, this if anything, it's squeezing a bunch of backside shorts on this play. And these plays, because the float is higher, they're easy to borrow, so tons of shorts can do as many shares as they want. Um, Virtually no cost, right? And it's also so liquid that, shorts are trying to do like 20, 30, 40, 50,000 shares and something like this doesn't matter. Um, and it's just like every single pullback, and there's like not a single 15, 20% pullback on this thing, right? Every single one just keeps pushing, right? So, um, just covering this is not ZVSA, this is not ATNF, this is just good news biotech play. And it's gonna and you really don't even try to use the book on this, guys. Like if these funds are accumulating, they will just slap every single ass that gets put up. Like there's all these ass, and they're just like, look at this, like slap, 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 slap. Like there's barely any bids on this, and they're just slapping the hell out of it. They're just slap, 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 and just look at this thing go, dude. Just look at this. Just relentless. Barely any bids, and it just keeps going up just because somebody's buying. Who's buying? I don't know. Some fund? I don't know. Somebody's buying. Somebody's buying it. It doesn't. They just throw up one bid and then just go straight up, man. This is one of the best long opportunities of the strong cycle in terms of just consolidations of clean rotations of follow through. Like this is really what a lot of retail longs and my long buddies, because usually low floats, you have to, if you want to make 30, 40, 50% on the long, you have to either be super early, so you have to be really good at reading bid support super early, or you have to trade like highly manipulated patterns. Like you need to trade a high day clear out that cracks 20%, you long at the bottom of the 20%, and it comes, you have to do stuff like that in order to make, a lot of, big percent returns in low floats, but on real companies, man, it's just every dip gets bought up, and there's infinite bid support, and every ask gets smacked, and yeah, man, strong Biotechs and a stronger market. So not really strong in terms of low floats, but strong in terms of definitely in terms of Biotechs and catalysts. So in Biotechs, even in weak markets, Biotechs always have a chance to make big moves because they're so event driven, right? So even if the market gets really weak in a month or two, you could still get plays like CCCC making 100, 200% moves, right? And that's why actually in weak markets, biotechs tend to squeeze people because they're so used, uh, day traders are so used to stuff going down that when a legit biotech company comes along in a weak market, they tend to squeeze people because A, the shares tend to be really cheap, and the gapping percentage tends to be really big, and a lot of shorts get caught. So, anyway, hope that was helpful. Try to avoid plays like this, uh, literally up only. So, have a good one, guys. Stay safe out there.